Hello guys, it is Tokyo here, and I'm just showing you guys how you can enter the market after the market has taken off. So this is a point of interest area on the 1 hour time frame, and I'm going to show you guys how you can get in on the 1 minute time frame. So oftentimes traders see or they miss the trade. It gets busy. You miss the trade, you realize that the price has come into your point of interest area and it has taken off. And it could be really upsetting if you were waiting for that area to be tested. But I want to let you know that you should never blindly jump into the market. If you see the market if you see that the market has taken off from a particular area, you should not just get in for a buy or sell. You should always wait for an area to be tested, a pullback of any one of those things on the smaller time frame. You don't want to just get in. So what I'm going to do is I'm going to press play and show you guys how you can enter into a market that has already essentially taken off. So from there, we're going to go down to the 1 minute time frame, and we're just going to look for an institutional candle, right? So we have quite a few of them. And how do you know which candle is going to be tested? It really, really strongly depends on the area. See, this one I would not select because we have one that is so close here, but this is a really big institutional candle and we still have some imbalance here. Do we have imbalance? No, I don't think that we do. But the market did create liquidity here. Right. So patience plays a huge role in this. Let's wait and see if the market will come back to test this area and reject. If it does, right, on the 1 minute time frame, we will enter the market because the market has already taken off and we really, really, really want to get into this trade. We've been waiting for this sell for a long time and we don't want to miss it, right? We are mindful of liquidity, although there are OBs here, price may test it, go down and come back up, right? Let's see how it plays out. Remember, we are waiting for this area up here. And the area was tested, right? The area wicked up and tested. This is an immediate point of entry, right? To take the market down. Let's see. We picked this point of interest area here at 646. And at 8:32, the market took off, right? 2 hours, not bad to enter a market, right? That has already taken off. From this area, you could have put a limit there and you could have been entered in there, right? And this was just a wick. This is the 1 minute time frame. This was a wick. So you would have been entered in, or if you were paying attention, it would not have moved that fast. I have the replay pretty fast. And I did not back test this prior to. So 2 hours is not a long time to wait. In the midst of that 2 hours, the market was creating a lot of liquidity, which would give you more confidence that the market will come back up to test that. order block there, right? And you have to be mindful when you are entering on the smaller time frame, such as the 1 minute. You want to pick an order block, right? If you're picking your order block and there's liquidity in between, like this was an order block, and as you can see in this OB right here, this institutional candle was here. Price definitely did reject from this area, right? And if you had your stop loss here, you would have been taken out, right? Because you have to be mindful of the liquidity to the left, right? So although this was an institutional candle, it definitely was mitigated. It was filled in. The OB was definitely tested, right? If you were in for a quick scalp, fine, right? If you were getting into this and at this point and you were targeting this low, you'd be okay, right? But patience plays a major role. And if you were waiting for, if you did not notice this area here and you were waiting for price to go into this area, right? And you had your stop losses above this high, you would have been taken out right there, right? Because you'd want your stop losses, you'd be mindful that these were equal highs right here, and that you will want your stop losses above the liquidity sweep, right? So you have to be a little bit generous with your stop losses, or you want to pay attention to all the order blocks, right? Right. So immediately we knew that this was liquidity. The market continued to make liquidity, right? And you guys could just continue to do this, right? So this is another point of interest area, right? We will not be surprised if price came back up into this area and continued down, right? So you do not miss trades. You don't miss trades. You can't miss a trade, right? You just have to simply be patient enough, right, to wait for a re-entry. And the reason why I say not to just blindly get into the market, let's say that price took off. Let's say that price took off, right? And it's selling and it's selling and it's selling. And you say to yourself, the next bearish big candle that comes in, I'm gonna get in. I can't wait anymore. And you get into the market here. And the market does something like this. You're done. So please, 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 please stop entering the market blindly, right? Wait for those pullbacks, wait for those retests, wait for it, be patient. The market is not leaving you, it will return. Sometimes it won't return. Sometimes it's gonna save liquidity for the way back up, right? We have to be mindful that the market has an agenda, right? We do not predict anything. It just has an agenda, liquidity, right? If we can figure out where the liquidity is, we can figure out where we can make the best decisions to make profit, right? So guys, please like and subscribe this video. There definitely will be more videos. And please backtest, please practice. And whatever pair that you are trading, this is US 30, whichever pair you are trading, backtest and use your free time to understand the charts, because this is all like a big pattern. Use your free time to see where you went wrong, right? Sometimes you will pick the wrong order blocks. Sometimes you will not see all of the liquidity to the upside or the downside, and that is okay, as long as you can go back and see where you went wrong and take that information onto your next trade, you'll be okay.